14th of December 2022. This isn't financial advice. So I just want to spend a few moments talking about capital allocation. So I've talked on previous videos that my big picture aim is to generate cash in the stock market, and in order to help fund investment in property, which sort of is a bit more stable and yeah, a bit easy to live with, and also yeah, just good constant cash flow that comes out of that. So I'm sort of hoping to have a well, I actually have done that. I just want to sort of take it to a whole nother level. Sort of have that barbell approach. So saying that, I haven't done that this year in the stock market. Haven't made any money at all, so it's been extremely tough year. But anyway, so increasingly, again, I've sort of discussed this in previous videos. I'm going to focus sort of more and more on options. So well, there's a number of reasons for that. Earlier in the year, I experimented with, because I live in Sydney, we're thinking about moving to America. So I started getting up in the middle of the night to be at the open, and yeah, well, that just didn't work for me from a sleep perspective in the slightest. But also, I don't look. It's just not me trading like that. So for me, I need to sort of just trade a bit less. Perhaps I'm just not that smart, or have the conviction to be a that sort of top 1% trader. But I have enjoyed success in options, and I really just like the concept of an option. You're literally buying an option as opposed to be it on a share or property or a pen. It doesn't really matter. Instead of outlaying all the cash. So for me, it's a lot less stress. So for me, I should note that stress and mental health is a big thing for me. So I do get stressed. So I have to find sort of the vehicle to address that for me. So so saying that, and the other thing with options is I don't need to allocate a huge percentage of my portfolio to make really good money. So that feeds into the desire to have sort of an increasing amount of property. So that means with option, I can still get a lot of exposure to shares without the same amount of absolute sort of capital allocation. So which I really like. Now everyone tells you that options are risky. That is 100% true. A company may not go down to zero. It's pretty unlikely to go down to zero, but whereas options quite often do go down to zero. So, but again, this comes down to that's the simplistic argument, and that's almost based on the premise that you're putting all of your money into an option or a sort of a basket of options, in which case you could blow up your entire portfolio. Whereas I'm thinking, well, if I'm allocating say 10% or 20% of my portfolio to options positions, the worst I can do is just lose that amount. So say if I allocated 10%, which I haven't done anything like that this year. It's been 1 or 2% at the most, but the most I could lose is that sort of 10% on the overall portfolio. So as long as I sort of keep that in mind, and happy to live with that potential downside if it comes, then I'm sort of comfortable with that. Because you're only putting down the option premium, there's only a certain amount you can lose. If I buy a property or buy shares on margin, for example, you can lose a lot more than what you put in, depending on the terms of your loan or margin loan. So following that through, it also means that I need to find stocks that have the potential to appreciate quite a bit more than what the market is thinking, for to really make sort of like the occasional serious money out of this. In and out trades, just like I said, don't really work for my personality. So I tend to do a lot of that. I tend to do a lot of sort of stuffing around and chopping around, and whereas I sort of zoom back out, I think, okay, focus on the stocks that have that serious potential to move, especially more than what the market is pricing it at. That's when I can make that serious money, of course, if it does come through. So to give you a very basic example here, let's just say a stock price is at $100. I buy an option with a strike price of $150, so well out of the money, and it's got 12 months to expiry, implied volatility of 50%. So that would mean that theoretically, at least, I'll be paying $7.76 for the call option on that. So that's the most I can lose. Let's just say it goes really well. The stock goes from 100 to 250 over the next 12 months. That means at expiry, and let's just say there's no time value left, which is say I'm going to either sell it or convert it to the shares the day before expiry, that all the value is in the intrinsic value. So that being the case, it's going to be the spot price of $250 minus the strike price of 150. So it gives me that call would be worth $100, which gives me a very large return. So 11, close to 12x return on those options. So, and these things do happen. Stocks do go up by this sort of amount if you get it right. So that's increasingly what we're going to focus on. Now, I'm also going to couple that with my sort of charting experience to try and blend that. This is like a longer-ish dated option to buy shorter dated options, if I've sort of read the charts right and sentiment and everything correct, to make some faster money on the shorter dated options to cover my longer term cost of my options. So in effect, my dream come true would be to have long-term option exposure that's cost me nothing or very little. So yeah, let's I have managed to do that successfully in one stock, which is GEO. So let's look at that. Yeah, hang on, I've got to send one of my trades with this. Just give me one tick. Whilst I'm just getting my transactions up. This is a stock that does have the potential. I think it's very undervalued. Does have the potential to, even sort of double from here. When I don't know, and that's always a problem with options. But I know that this thing's got built-in sort of fundamental value that's growing as they're sort of paying down debt. So actually, I forgot to note a point there. It's all very well to say, well, if a stock goes from 100 to 250, I'm going to make 11x on my 12x on my options, but you have to have the conviction to hold. And quite often I have, and I've sort of been skittish. So I need to come back to narrowing down my watch list to stocks that I believe in, has an understanding of what the fundamentals are doing, albeit, so whether it be a sort of true market leader, a stock that's sort of rapidly growing earnings like a Tesla from a year or two ago, Apple from a number of years ago, or an extremely cheap stock that's getting picked up by the market. So this is like the Mike Burry example in this case. So let's get my transactions on this other screen. Should have been a bit more organized with this. Okay, first bought options on the 3rd of the 10th. These are the shorter dated ones. 3rd of the 10th, sorry, where was that? Yeah, here. After that sort of Bible gap up sort of day, retraced to the 50, bought it there, really happy with that. Sold half of those on this 7th to 11th. Happy with that. So he's selling some into strength. I find that, well, especially in shopping markets, you've got to be selling something into strength. And at the same, so a few days later, bought a longer dated option, and a few days later sold the other shorter dated option that I had. So basically funded my longer dated. So, and then yeah, sort of ripped higher from here. So I would have been better off probably just holding that shorter dated option here. Now, there was a report that came out, of stockbroker report, saying it's worth $14. Had my wits about me a bit more. This is when Mike Burry announced he'd been buying more, so I should have actually, I was sort of selling into that strength. Maybe I should have had a bit more conviction. I don't know. That's an easy one to say in hindsight. This market's sort of so tough. But tell you what I really should have done is also been buying the longer dated options back here when the stock was at, so closed at 816, so it'd be up even more. Super happy with my thought process and execution on this trade. Few little minor odds and ends I could have done better there. Probably the big thing though is just allocate more money to. I'm like, because I've sort of been sort of such a tough road, I've only allocated probably not even 1% of my portfolio to it, so it's not exactly making a big difference, but the learning's good nonetheless. So this is a textbook example of what I'm looking to achieve. It's not to say I won't trade in and out of this, but I'm sort of hoping for a consolidation here. I'm almost wondering if it just had it. I just don't know the market at the moment, which we'll get to in a moment. But if it has this pullback, buy some more options, maybe a combination of shorter data and longer data, and if it goes up, sell those shorter data again to fund those longer data ones, and so forth. So anyway, that means I'm going to be trading a lot less, probably commenting a lot less. But yeah, just really focusing on those handful of sort of really good stocks that have the potential to really move along. So enough of that. So just a few general thoughts. This is my old favorite, the percentage of stocks, NASDAQ 100 stocks trading above the 50-day moving average. This is just zooming out a bit to say 3 years. And actually, so let's just quickly go down to 1 day. Whoa. Sorry. So I get this right. So the percentage of these stocks trading above the 50 days actually being at high levels. And I did make a note on previous videos. I wasn't so concerned about that coming out of such a deep market correction. I'm not sure if that view was that correct. So I think caution is still definitely warranted here. There's still plenty of optimism sort of priced in at the moment. So anyway, inflation numbers came in much better than expected, and stocks actually opened up strongly. So these number of stocks trading above here actually popped up really high to almost close to 90, which is, I guess, a very high number before sort of selling off here. So yeah, a little bit of a fizzle of a day. But so I just go back to my original point, zooming out. When your number of stocks getting to that sort of 90% level, it quite often is time to be cautious. Doesn't mean it's going to crash. Might have some sort of consolidation, who knows, but we're definitely not in these sort of bottom oversold areas where it's sort of due for some bounce. So I'm being very cautious at the moment. So on that note, the only positions I've got now are GEO, RIG. This is another one of those fundamentals. I think it might have the potential to do a lot. Saying that, it's sort of, well, it's just obviously in a base at the moment here. So I've got a combination of shorter and longer dated options here. I'd love to add more to this position, but I'm not really seeing anything overly convincing in this chart here. Sort of could fizzle one way or another, just meander, for God knows how long. It's already done that for a while. Got the position in CALX, but they expire. Those options expire on the 16th, and they're all but worthless now. So I'm going to lose my option premium on that. Last one is SHLS. I've thrown in the towel on this. I've sold it. They were January 21s. Now, this chart looks good. I don't really have any understanding of the company itself. I know solar is sort of in a good space, but I just don't have that conviction and think, well, could this go on to be a huge one for me? I understand the company's got a lot of debt. They've done a share offering here, so quite often that just puts a cap on the share price for quite a while, well, for a period of time. So coupled with my uncertainty on the market, I decided just to sell that out, to sell those for a loss, and really just batten down the hatches a bit and just tighten things up. Not to say I won't go back in, of course, but for the time being, I just wanted to play a defensive hand. That's about it.